Good afternoon, ladies and gents. I'm definitely happy to be here today. So I'm here to present our paper, Sustainable Competitiveness in Manufacturing, Examining the Role of ESG in Green Innovation. I am Ghada Abdelwahed from the Arab Academy for Science, Technology, and Maritime Transport from Egypt. So to start off, you just have to see how firms deal today. So firms tend to face a lot of challenges to remain in the business environment due to the technological changes arising and the evolving markets. So now they tend to be more concerned about social and environmental impacts. So they are more focused towards the stakeholders, satisfying stakeholders' expectations rather than just focusing on shareholders' needs of higher share prices. Right, so our contribution for this research is that for the first thing, we analyzed the indirect impact of the ESG on the S&P, the Sustainable Management Performance. We base our analysis on one of the developing countries, Egypt, which we believe is the first analysis to be conducted on this area in Egypt. Now, the research is based on two main theories, the stakeholder and the economic and the dynamic capabilities. So the stakeholder theory states that firms must satisfy stakeholders' expectations rather than focusing on just shareholders' needs of higher share prices. While the dynamic capabilities theory states that firms must adapt and innovate to maintain sustainable advantage on the long run. So to start off with the first factor, the ESG strategy, it definitely has three pillars, the environmental, social, and governmental dimensions. So the environmental dimension focuses on the protecting the environment, the natural and the natural resources and ecosystems. So it focuses on minimizing pollution, reducing emissions, and this sort of thing. The social dimension, however, focuses on the social responsibility. So it focuses on labor laws, human rights, product safety measures, and this sort of thing as well. The governmental dimension is actually associated with the rules and regulations set by the government, so satisfying these rules in addition to the corporate ethics as well. Okay, so ESG practices are meant to engage stakeholders and contribute to higher sustainability, aligning with the stakeholder theory. Another thing is that ESG practices help firms to integrate sustainable development with innovative development necessary for environmental protection purposes and cleaner production. And achieving cleaner production, aligning with the dynamic capabilities theory. So from that, we can definitely derive our first hypothesis that ESG practices positively impact the green innovation. The second factor in our model is green innovation. So green innovation refers to firms producing new products based on new ideas. Which creates value for all stakeholders, of course. Another thing is that firms nowadays can no longer rely on their core resources, so they tend to seek for other dynamic capabilities in order to enhance firms' adaptability, innovation, and long-term sustainability. Based on that, we can drive our second hypothesis that green innovation positively impacts S&P, Sustainable Management Performance. The S&P, it actually focuses on firms' competitiveness on the long run, so achieving a competitive advantage. They tend to redefine the strategies. Firms tend to redefine the strategies to combine internal as well as external resources to acquire the necessary dynamic capabilities in order to meet stakeholders' expectations and help enhance S&P. So for our research model, we use the green innovation as a mediator between ESG strategy and sustainable management performance. For the purpose of our analysis, we use a quantitative analysis using administrative questionnaires based on previous studies. We use the 33 Egyptian manufacturing firms having 367 valid responses. We use the purpose of sampling using directors, targeting directors, the CSR managers, CEOs, board directors, operational managers, as they are more familiar with sustainability and social impacts. For the purpose of the study, we also use PLS-SAM for structural model analysis, and we definitely rely on the stakeholder and dynamic capabilities theory. Okay. Based on the analysis, both hypotheses were supported. So based on that, Egyptian manufacturing firms tend to apply ESG practices as they redesign management strategies to respond to the changing business environments. Another thing is that Egyptian manufacturing firms tend to integrate their internal resources with the external resources to acquire the necessary dynamic capabilities in order to reduce uncertainty and satisfy stakeholders' needs and expectations as well. Now, based on these findings, we definitely have practical implications in terms of firms and for policymakers. So now, as for firms, Egyptian manufacturing firms are definitely advised to incorporate ESG into their corporate strategies for long-term maintaining long-term competitiveness in the market. They're definitely advised to invest in R&D and green technologies in order to boost innovation and sustainability. Last but not least, they may also consider having a collaboration between the supply chain members in terms of suppliers, the employees themselves, and the outside customers in order to boost these sustainability efforts. For policymakers, they may as well promote partnerships between local and international firms for green technology and R&D exchange. Another thing, they may consider having some policy incentives, such as tax benefits, for instance, to encourage ESG adoption and green innovation for Egyptian firms. As you can see, we have some limitations for this research, and based on them, we're gonna discuss maybe suggestions for future research. So for the first thing, our research was focused just on manufacturing sector, which quite limits the generalizability of the findings. So based on that, we can definitely suggest using other types of businesses to generalize the results. Another limitation is the limited number of factors on S&P. So definitely another suggestion would be using more mediators and moderators to analyze their impact on S&P. And I'll actually get back to that in a few seconds. Last is that the study was only based on Egypt as a developing country, but we definitely can suggest applying this model on other developing countries, or maybe conducting a comparative analysis between the two. Now back to my point of using more factors on the model. I myself am now working on another research paper where I actually did that and included more factors. So I used the corporate repetition as another mediator between ESG practices and S&P, and I used green finance as a moderator on the model. So I'm currently working on that and hoping to get some beneficial results. Thank you very much for your attention. Does anyone have any questions?
All right. Audience, so do we give a round of applause? Okay. All right. I would like to invite the questions from the participants. Please feel free to ask questions to the presenter.
Hi. Oh, thank you. Thank you.
Okay. No, we have, that's fine. We still have time.
Yeah, we have time. Yeah.
Yeah.
Thank you. I'm sorry, to illustrate more of the factors. Okay. The question. Okay, the questionnaire we used it was based on previous studies. So we had some questions associated with ESG practices and others associated with green innovation. As I mentioned before in the slide. We targeted those who are more involved with sustainability and social impacts and this sort of thing, just like operational managers, directors, CEOs. So we targeted them to answer these questionnaires, and from that, we analyzed the results. Was I able to answer your question? Oh, the model itself? Oh, the empirical model. That would be in the research paper. If you would like to refer back to it or maybe connect with me, because I don't have it now at the time. No problem.
Oh, okay. I think one of the questions which I would like to bring to your attention as well is the fact that most of the firms nowadays they're adapting to ESG initiatives.
Yeah.
And there's a lot of discussion about implementation of ESG. For instance, you looked at manufacturing, and there's implementation of ESG. You looked at green innovation. Now there's a lot of discussion about whether cost really plays a very important role in promoting ESG, because when you look at the existing literature, some of them they talk about it drives the cost. For example, in implementing ESG initiatives, drives the cost. I mean, you looked at from the point of manufacturing. Could you focus some light on the cost aspect?
It definitely drives higher cost for the firms. However, it keeps them running in the business because it gives them a competitive advantage on the long run. So on the long run, they remain in the business because now people are more concerned about that. So even nowadays in the regular business, if you're shopping and you always check the tag and see how much this company contributes to sustainability. So now people are more aware of how sustainability helps the future generations. So yeah, they do spend higher costs, but they get that in return in the future.
So, thank you very much.